Ladies and gentlemen, hello. I'm Nils Baranger from ChartGuidance in partnership with Dukascopy TV. And today we are going to talk about the Japanese stock market, especially regarding the recent shocking intervention of Bank of Japan. On the first slide, which is a long-term chart of the Nikkei stock market, we see that that market attempted 5 tops. And the first one failed, as we can see that the overlying momentum turned negative, as well as the underlying momentum. So what we are going to watch very closely over the next few months is that the price must preferably stay above the green line, which is the pivot line, and that especially the underlying must stay above the horizontal, which is the 0 line. On the next chart, which is a quarterly chart with the same indicator, we see that the very last time all of the 5 momentum oscillators have remained positive was during the last attempt to make a breakout. So for this time, we are going also to look very closely to those indicators. Next one, which is a yearly chart. A yearly chart, so this is very the underlying trend. We can see that very soon, at the opening of next year, 2015, we are going to witness if all of the 5 indicators will turn positive, which will be very powerful and positive for the Nikkei. On that next chart, what we will monitor very closely is on the green line, which is the buying pressure, on the red line, the selling pressure. We can see that at the previous top, this has failed, means that the selling pressure finally went above the buying pressure. The quarterly chart with the same indicator, we can also see that the buying pressure has been falling while the selling pressure is staying quiet. This was part 1 of 2. Nils Baranger from ChartGuidance in partnership with Dukascopy. See you on part 2 of 2.